The price of platinum is trading at just under $1,000 per ounce, which is the exact same price that we saw it trading at a decade ago, back in 2015. But platinum has not always been a dull and boring asset like it seems like today. In winter 2001, the price of platinum bottomed at $430 per ounce. It spent the next 6 years drifting higher in a nice bull market due to rising demand. But when it comes to around 2008, we saw this melt up where the price of platinum spiked to a record $2,240 per ounce. What caused this price to spike and what caused the crash afterwards? It is worth noting that commodities generally had a melt up in prices in 2008 as the Fed funds rate had topped in summer 2007, which prompted capital flows into hard assets such as oil, natural gas, the grains, and also platinum. The physical platinum market in 2006 was relatively well balanced as growth in autocatalyst sales led to higher platinum demand. Yet South African miners, which account for around 70 to 75% of global mined platinum supply, had also been increasing output. In 2007, the supply of freshly mined platinum fell 2% to 6.6 million ounces, and demand grew at the same time to 7 million ounces, which put the market in a physical deficit. In January 2008 was when we started to see the unfolding of an electricity supply crisis in South Africa, which had a big impact on mines. The state run energy provider Eskom Holdings could not meet demand, which caused a 5-day shutdown of platinum mines in South Africa. When the power supply increased, it led to rationing, which really limited the amount of output that the miners could produce. And there was also reports from South Africa suggesting that this could be an issue for many years, which caused a bit of a panic in the platinum market. A perfect storm of factors led to the power crisis. Aging power stations, which were prone to outages, poor planning and logistical challenges meant that Eskom, the state-owned power supplier, faced coal supply shortages. Extreme flooding meant that coal stockpiles were drenched, wet coal was clogging conveyor belts, and slowed the combustion process, leading to less power generation. The largest platinum mining companies in the world are situated in South Africa, and at the time they was instructed to reduce their power consumption by 10 to 15%. This led to some mines being shut down, delays in smelting and also refinery as well, which really limited the amount of output in the platinum mining industry. The most serious incident affecting production was flooding at the Amandelbult mine, following exceptional rainfall in January, which resulted in a loss of 67,000 ounces of platinum. The news of lost mining supply was only half of the story because the news from South Africa was starting to cause a lot of anxiety and panic for automotive manufacturers. Platinum is an essential metal for the car industry, and if there is no platinum, this would cause output to fall. Due to this, autocatalyst manufacturers were scrambling to secure stocks of platinum in fear that they would be unable to secure enough supply. This led to a panic and a surge in prices. To put this into context, the first half of 2008 saw Anglo Platinum's production at 1 million ounces. That was down 16% year on year. By 2008, the price of platinum had collapsed down to $1,000 per ounce. There was a few factors that led to this, the first being that electricity supply to the mines began to stabilise, which allowed miners to be able to plan ahead and maximise the output despite ongoing issues with electricity supply. It also emerged that electricity crisis was not as bad as first feared. Only 60,000 ounces of platinum supply was lost during the year, which was slightly below the 67,000 of production due to the flooding of the Amandelbult mine in January. The great financial crisis was also beginning to have an impact on the platinum market. Platinum demand is inextricably linked to industrial activity, so with lower activity, there was forecasts of lower demand for platinum. At the time, the consensus was that the automotive demand for platinum would be down by a third in 2009 compared to the same period in 2008. This was a sure sign platinum demand would fall significantly, leading to speculators selling platinum. The economic conditions had meant that, particularly in Europe, consumers were gravitating towards small, economic and cheap vehicles, which were typically petrol fueled rather than diesel, which had a great platinum demand. Other factors which was having an impact on the price of platinum was switching from platinum to palladium. Palladium is a metal that has similar properties to platinum, so it can be used as a substitute if the price of platinum went too high, which is something that we saw leading up to 2007 2008. The advantage that palladium has as well is that even though it has a similar property to platinum, so can be used in the same way in the manufacturing process, palladium is not as dense. So if you are a buyer in kilos, you actually get more metal if you buy palladium compared to platinum. So there is a manufacturing advantage to switching to palladium. Due to the economy at the time, tightening credit conditions meant manufacturers was limited in any financing which could have otherwise lifted their production and therefore demand for platinum. An important question to ask is, could the price of platinum spike again like it did back in 2008? It happened once, could it happen again? The answer is yes, and the reason being is because of the concentration of mines in South Africa. Over 70% of platinum mine supply comes from South Africa, which is a dangerous concentration of supply. If something was to happen in that country which would cause the mines to close down, even temporarily, it would cause an abrupt end to the supply of mining platinum. However, it's worth noting that things have been put in place to make sure that 2008 energy crisis doesn't happen again in South Africa. Anglo American Platinum installed a 100 megawatt solar farm at the Magolawina mine, which is the largest open pit mine in the world. Power tariffs were also introduced in the country in order to pay for upgrades to the power grid. Anyone that's been following Auronum will know, especially from the videos and the articles that we put out on the website, that we are very bullish platinum. It looks like a market which is neglected, which means it's cheap, and the price action has been going sideways for 10 years now. This is what commodities do when they form a bottom. And as traders say, the longer the base, the higher in space. So if platinum does decide one day to break out because of the demand increases or supplier issues, platinum prices could go ballistic. If you want to stay updated with things like this, the content that you see in these videos is only part of the research that Auronum publishes. We put out a lot more research articles on our website than we do videos. So if you click the link in the description, you will be taken to the page where you can browse all of the pieces of research which are specific to platinum, silver, and gold, and other economic conditions which impact all of those metals.